Hello, Market Club members everywhere. Adam Houston here, coming to you from the digital studios of Market Club. Well, it's the 14th of September. It's a Wednesday, and we're looking at a weekly chart of the S&P 500 cash. What I wanted to show you is the RSI and where we are in the marketplace. We're actually unchanged based on the close yesterday in this market for the week. We had a very sharp down week the previous week. You can see we closed right around the 2,127, and we're just a little bit higher than that today. So how we close for the week is going to be very, very important. But the important thing I want to share with you today is where we are on the weekly RSI. The weekly RSI, you can see that we're still above the 50 line. Very important. You can see we crossed over here, which is right around this point here, and we stayed above that line since February. So let's see how that support holds up. But I think it's going to hold up. We may do 1 or 2 more days or weeks down here, but I think eventually we'll turn back up based on our monthly trade triangles. The only one that's down right now is the weekly, and that's giving us the 60 reading, which is basically a trading range. And that's what we're seeing right now, is a battle between the bulls and the bears. So let's see how that plays out. But on the weekly charts, we are still above the 50 line, which is really positive in my mind. And how we close on Friday is going to be very, very important. Similar pattern on the Dow. It's still above the 50 line on the RSI. Good sign. We may have to do a little bit more work, but you can see we're really, if you just draw a line, like a line right across here, you see we're pretty much in the support area of the previous highs. Previous highs once were resistance, now they should be acting as support. So we'll see how that plays out. But again, this is the Dow. How we close for the week is going to be very important. If we close, let's say, if we see a close like this, I'm just going to color this in, and let's see if we can put the blue color in there. Let's just see if we have a blue color. So if we were to see the market sort of close off something like this for the week, it would be very positive in my mind, indicating that we probably have seen, in all intent and purposes, some sort of a low put in place here. So this was once resistance, and now we think it's support for the time being. So let's see how that plays out. This is the NASDAQ. You can see actually the NASDAQ is actually higher for the week, which I think is very, very encouraging. You're also above the RSI 50 line, support line, by a good amount. So generally speaking, I think based on our monthly trade triangles, which are still positive, and the RSI, plus we have a positive week going. Let's see how we close for the week in this index. That's the NASDAQ Composite Index. This is the gold market. We closed last week in December. Gold at 1,334 or 1,325, or about $10 down for the week, just about a 0.67%. But generally speaking, the market is in a trading range. In terms of the longer term, still positive, while the intermediate term and short term are negative. But if you look at this, where we've been, it looks like we've been stuck in a big box in this market. And I think that's the thing to look at. Here's the box we've been talking about. It's kind of like really is right here. And we're still trapped in this range. Let's see how we can get out of that. And I think it's going to be on the upside, but it's still too early to tell for sure. This is the weekly crude oil chart, October contract. You can see we're below the 50 line. Kind of a mixed bag. We have our weekly is still positive, indicating that the short-term trend is up, but nonetheless, I would just prefer the sidelines in this market. Now here's an interesting stock. We've talked about this before. It's called EOG. I couldn't pronounce it correctly last time, and one of our members told me it was EOG, and it's EOG Resources. And you can see, if we scope this out, you can see it's actually had a pretty nice run up, but I don't think it's over with yet. We've broken over this point here, and this is a weekly chart, by the way, but we've broken over this resistance level right here, and we sort of moved above that. So I think what we're looking at right now is more of a consolidation. We are way above. You can see there's the 50 line right here, and we're way above that. So I think if you were to buy EOG, I would say if it closes or it moves over 90.30 today, it's currently trading 89.74 right now, so it's a little bit lower than that. But if it were to close over 90.30, I would buy it, and I'd put a stop at 88.60. Let's move on. Another stock that we like is Kinder Morgan. This may be a longer term play, but you can see that both of our trade triangles are positive. It's a 55, which is a trading range. If you were to buy Kinder Morgan, KMI is the symbol, 2160 is the last price. I would put a stop at 21.19. So very little risk. And the potential, I think, is still good longer term. So let's see how that plays out. Hey, I'm Adam Hewison for MarketClub. Thanks for stopping by, and thanks for watching this video. And also thank you for your business. Have a great trading day, everyone.